Welcome to Leading the Way, Strategies for Ports in an Uncertain World, a partnership podcast series created by Journal of Commerce custom content for adports Group. I'm Alessandra Barrett, Associate Director of Special Projects for Journal of Commerce by S&P Global. In this series, we explore the expanding opportunities across global supply chains for businesses to light the path forward, driving change from operations to mindset, and creating benefits that extend far beyond one business. In our final episode, I'm joined by adports Group's Vice President of Investor Relations, Mark Hammoud, to discuss the factors shaping port investment that solves for tomorrow's challenges. Welcome, Mark. Thanks for joining me today.
Thank you for inviting me for this podcast, and glad to speak to you as well.
In a recent webcast with some of your colleagues at adports Group, we discussed the questions around investment in port infrastructure, and I'd like to get your thoughts on this. When planning for future demand, how do you balance long-term strategy with market volatility?
Well, I think investment in port infrastructure are long-term in nature. Short-term market volatility doesn't really change the long-term strategic outlook and decisions that are made, which are very often the results of different variables influencing that decision, including the G2G relationships, whether they're political or economical, geopolitical developments, economic and social benefits as a whole for the country or for the region. I'd like to compare it to investment in the stock market. Everyone knows that there is short-term volatility and risk associated to those investments, but the returns are still attractive over a long period of time. And there are studies showing about 10% return, for example, on a CAGR basis for the S&P over the past 10 years. So I would say the same logic applies for port infrastructure. It's a long-term view that you're taking based on all the points that I just mentioned. And short-term volatility is inherent to the business, right? It's not what you base your decision on.
How is the government's interest in diversifying the local economy aligned with your corporate strategy and minority shareholders' interest?
We are part of the Abu Dhabi industrial diversification strategy in a sense that we are a key enabler of it and also a key beneficiary of it as being the exclusive master developer and regulator of ports and related infrastructure in the Emirate of Abu Dhabi, including economic city and free zone. So we completely in sync when it comes to the strategy of Abu Dhabi and the UAE to diversify its economy. We work hand in hand, and this is true not only locally, but internationally as well.
What about changing trade flow patterns? How are you assessing those predictions, and how is that impacting your investment strategy?
There are various factors impacting the trade flows concerning the UAE. There are also some free trade agreement, or called CEP, by the UAE, which are trade agreement that the country has been signing with some other external countries or region. The idea is to develop obviously economic partnership agreements. 5 of them have been already in place: India, Turkey, Indonesia, and Cambodia. The UAE targets 26 in total eventually. So there are various initiatives at macro level, at the government level, that are basically influencing the trade flows. And I think as a company, you need to be agile, you need to be flexible, you need to be reactive, and look at how all these macro factors are shaping the trade flows, the trade corridors. And we've seen that in various examples in the recent past. I'm thinking about obviously the COVID pandemic. I'm also thinking about the different wars going on at the moment. All that is affecting trade flows. So if you're not agile enough and flexible enough, it's hard to adapt, and it's hard to direct your investment where you need to direct them.
In the context of port infrastructure, what constitutes a sustainable investment?
ports infrastructure is long-term and by definition sustainable. Sustainability in the sense of more eco-friendly. And in that sense, it's basically electrification. It's with green energy, as green as possible. It's also about vessels that are calling your ports, although it concerns more the shipping lines rather than the port itself. But putting in place certain regulations, taking initiatives to turn your port infrastructure more and more green and decarbonize your operation are various initiatives that you can take to make a more sustainable environment within your ecosystem, within your supply chain ecosystem.
I'd say for many, the question of green business being good for overall business is not one that really needs to be debated much anymore. But what are your thoughts on where green business and overall good for financial business and good for investment align?
I think the trend is also related to the fact that the financing part of the equation is more and more focusing on green investments and sustainable investments and ESG in general. So if you look at the ESG investing globally over the past 10 years, it's been soaring exponentially. There's a lot of financing and investments that only go in green assets or in assets that have a strategy to turn green in short, medium, or long term. I think what matters for the investment community is, and the financing community generally speaking, is that there's a path for turning your operations, having assets which are green in the future, at least a path to it and visibility on the different milestones along this timeline to be green. So I think funding and financing is always the key driver. And in my opinion, it is when it comes to sustainable investments, green investments, and green investing. The investment community looks at ESG and green assets as a base for their investments.
Ports Group has healthy CapEx plans for the next 5 years. Where are you directing investment?
So the three buckets where we're directing our investments are port concessions. We've started to expand internationally in Africa, in the Indian subcontinent, and we'll continue to focus on securing port concessions in the key regions that matter again to the UAE from a trade perspective, from a geopolitical perspective, from political perspective. So we will continue to invest in port concession. We'll continue to invest in maritime capabilities to densify our supply chain capabilities, to improve Abu Dhabi's connectivity, to build scale and thus improve the efficiency and the profitability of the operations. And the maritime capabilities include the container side, but also the bulk, whether it's dry or liquid, but also the ro-ro and the offshore. So the fact that we're involved in all these segments within the maritime cluster allows us to be exposed to different market forces, different volatility cycles, and as a result, we create a natural hedge within the maritime cluster and maritime operations so that we're not exposed at the same time at a downward or upward trend, and it brings this sustainability in the business, to your earlier point. And the third bucket where we're investing is in logistics. We completed a big acquisition, which is Nuatem, which is providing us a platform in the logistics space in 27 countries. We will continue to invest in logistics because we need to build scale again, and with scale we have efficiency gains that we can extract from the operations. And in the end, the reason we've been investing in both logistics and maritime is because these two operations have the relationship with the customers. And when you have the relation with the customers, you can influence the trade, you can direct the trade into your capital intensive assets like the ports and the economic city and free zone, and you can better sweat these assets. So it's a way also to create some captive business within the ecosystem that we're trying to build and that we're trying to replicate outside the UAE. We have it in the UAE across the 5 clusters operations. The idea is to replicate that again in the key region and countries that matter to the UAE when it comes to trade flows. And by replicating that, we create this end-to-end solution for our clients. And we're making also our clients more sticky in nature because they start dealing with us in each one of the clusters for different operations and different supply chain requirements, which makes them more sticky, and it becomes more difficult for them to go elsewhere when it comes to logistic and supply chain requirements.
To close, I'd like to get your thoughts on adports Group's greatest strength from the investor relations side.
We offer, I think, a good venue for investors looking at equities and bonds in the region to diversify from some of the key sectors in the region. Traditionally, these sectors have been real estate, banks, petchems, and more recently, oil and gas with the likes of Aramco or the ADNOC complex. But a lot of these industries are involved in the oil and gas industry. We provide an alternative to play to our first point, this diversification strategy that the UAE and Abu Dhabi have embarked on. So it's quite a timely investment vehicle that investors look at today.
Mark, thanks for taking time to sit down with me today. It's been a great conversation and wonderful to get your perspective on these topics.
Thank you, Alessandra.
This has been Leading the Way, Strategies for Ports in an Uncertain World, a partnership podcast series created by Journal of Commerce Custom Content for adports Group. I'm Alessandra Barrett for Journal of Commerce by S&P Global. Thanks for joining us today.
Journal of Commerce Custom Content is a division of S&P Global. The Journal of Commerce newsroom was not involved in the creation of this content.